Welcome to OAG's latest webinar. This is our second production of the day, and good morning to those of you listening in the US and beyond, and good afternoon to those of you joining us in Europe. And I'm assuming nobody is joining us from Asia, but if you are, good evening. Okay, this month we are taking a look at sustainability and the journey to net zero. We're going to be looking at what the targets are, what's agreed, and by when. We're going to have a look at the money. How much is all of this going to cost, and who's going to pay for it? We'll look at some of the developments that are happening in the industry to meet the targets. SAF is one of those, and we're going to have a conversation about what's happening in that field and in some other technological developments. And it would be great also if we get time to get to talk about how is this going to happen across the industry? Are we waiting for regulatory frameworks, or indeed are there different approaches that are being taken? And of course there are, and we'll explore some of those as we go. We'll be taking questions throughout, so please don't hesitate to pop your question in the chat box and let us know, and we'll deal with those. And feel free to address those to any of our panel members, who I'll introduce now. As ever, joined by John Grant, OAG's Chief Analyst. Welcome, John.
Hi, good afternoon, good morning. Good to be back, Deirdre. Interesting subject, lots to talk about, and great discussion this morning. Let's hope for the same this afternoon.
Great. For those of you who don't know me, I'm Deirdre Fulton. Thanks for the nod there, John. I'm business partner at Midas Aviation. I have popped in and out of these webinars from a hosting perspective, so I'm delighted to be back in the hot seat. Also delighted to be joined today by two panelists. We have got Lauren Riley, who is the Chief Sustainability Officer and MD for Global Environmental Affairs at United. Lauren, welcome.
Thanks for having me. I'm looking forward to today's discussion.
Great, we're looking forward to hearing how things are in your world and what's going on there. And last, but by no means least, delighted to be joined also by Kit Aston. Kit's the co-founder of Thrust Carbon, and they're a sustainability intelligence platform that helps TMCs and corporates and OBTs access, analyse and plan high quality sustainability data. And the data is used by, I think, Kit, over 50 billion of annual travel spend. So hoping to hear some interesting insights from you as we go on the subject, grounded in your experience. Before we delve right into the sustainability subject, we just want to do the usual line in the sand around where we are in capacity terms, and those of you who've been listening right from the start back in the early days of the pandemic will be familiar with our tracking of global capacity and where it is. We're nearly almost there, aren't we, John? And we keep saying we're going to stop talking about 2019, and I think some point soon we are just going to have to stop talking about 2019, but none of us are just quite ready to give it up.
No, we are. Yeah, we are. We're so close to where we were in 2019, and we can forget about the pandemic, load of damage to the balance sheets and all of our lifestyles. Yeah, it's changed everything forever. There's no doubt about that. But we need to also, of course, keep in mind that we've actually lost 4 years of normal demand growth and capacity growth. And that equates to around 76 million capacity gap for the month of July, and it's that's a big number in itself. So we need to be cognizant of that, and obviously in the context of what we're going to discuss today, we've seen lots of change in terms of aircraft types that are being used. Older aircraft type have been retired by most of the major airlines around the world. and there's a big push towards that sustainability with the new aircraft variants coming in. International is still lagging a little bit, and I actually was just looking at some numbers for capacity this summer between China and the United States. China reopening in January at short notice, ongoing political disputes, lack of cooperation perhaps between China and the US, and of course the Russian overflying issue means that that market, which was 3.6 million seats last summer, is just at 260,000 seats this summer. So there is a huge capacity gap that we see in that market alone. And Lauren will know more that United, just as one airline this summer, have put a lot more capacity into Europe because they've had more spare capacity available, and the strength of the US dollar, of course, versus our extremely poor pound sterling and euro makes it a cheap place to visit and spend those dollars. I wouldn't get too panicky about what you see from October onwards in the reductions in capacity. That's normal to see at this time of year, and again, it's because the Chinese airlines are very late in publishing their schedules, and we get this situation every year. So it's not a moment to panic, Mr. Mannering. Everything's going to be right. It will come back in. But it just makes it look like there's a bit of a doomsday event happening at the end of the year. Nothing planned at the moment.
Good. So regionally, John, the picture is looking pretty optimistic, isn't it? In terms of,
yeah. I mean, there are some markets that are growing really quickly. Latin America has been strong throughout the pandemic. Brazil was a market that never closed. Mexico was a market that never closed. Brazil's bouncing back strongly. Colombia's been buoyant for a long time, so that's all good stuff. North America is plus 0.5 percentage point. Lots more competition in the domestic market. The ultra low cost carriers beginning to squeeze the legacies, and of course a bit more international flying towards Europe. So that's another positive development. In the Middle East, Qatar Airways, Emirates, the big three continue to fly through the pandemic and are seeing the benefit there. But a lot of that is driven by the penetration of low-cost carriers in the region, which is growing rapidly. And of course, in the next 5 years, we've got Vision 2030 for Saudi Arabia, and we should expect that to have an impact on future numbers. Africa is Africa. It languishes. It's very hard. One step forward, half a step back. And Europe, we're still 4% down, but some of that is because of flying to and from the Ukraine. The German market is down quite considerably, partly because of less domestic flying, more use of other alternate modes of transport, which we'll discuss, I'm sure, in the sustainability discussions. So generally, we're getting back there. Record airfares. Absolutely record airfares, and the price of oil has been falling through the summer. You've even allowing for the increased resource cost that we're seeing in the airlines. You've got to think that this is going to be an extremely good quarter for the airline industry in terms of profitability throughout the world. Load factors are high, demand is strong. We've not really seen that pent-up demand disappear yet, which is a bit surprising. I think it will soften later in this in 2023, but it's a good outlook at the moment for the airline industry.
It's peak month, isn't it? If we can't see a good result in July, then when can we? I guess is one way of looking at it.
Well, the answer is August, of course.
Well, yeah.
So depends where you are. In North America, of course, it's school's out now. That famous Alice Cooper song. So that will be a good month there. But it will carry on. The shoulder seasons here are in both North America and Europe are a lot stronger than they used to be as well.
Okay. It's not all plain sailing though, is it? And we sort of hesitated, really, having spent most of last summer talking about the operational difficulties that we saw at airports right across the world where recovery had begun in earnest. There are still difficulties, aren't there? It feels like we've moved on from there simply not being enough check-in staff or crew or frontline operational staff.
Yeah.
That was last year's headache. This summer, there's a different story emerging, isn't there? Now, some of that's a North America story about weather events, and we've got some data here to share with you. And some of that's about more not longer term, but structural issues in the industry that are causing capacity constraints that ultimately are tipping over into resource problems.
We are. We're no longer scoring own goals in terms of not having enough staff and all of the resources and all of the things that you mentioned. And airlines this summer, in all of their planning, were well ahead of the curve in terms of getting resources, bringing people online, getting the necessary passes, and all of those processes were, that was working well. What you can't in this industry take account of course, is the weather and the impact of weather. And although it's always something that occurs at this time of year, particularly on the east coast of the US and in Central Europe, when the weather heats up and we have a sustained period of hot weather, we get those big thunderstorms. And then that's part of a sustainability argument and climate change, of course. And the industry can live with that. It knows it has to deal with it, and it's dealt with it in the past, and it will deal with it in the future. What it cannot deal with is the external agencies not having the resources to help them through those processes. So, yes, there were some very, very severe storms in the Newark area the week before the 4th of July, last week of June. You can see United's cancellation rate went up to 13%. Sorry to mention that, Lauren, by the way. But equally so did JetBlue's. So, it was a feature of New York. But a lot of the problems were you just couldn't get aircraft in or out, and there wasn't enough ATC options available and resource to help get them out. And one of the bolt holes out of New York when you're going westbound, when things get really bad, is to actually go through Canadian airspace. But that bolt hole was closed because the Canadians didn't have enough air traffic controllers. So it all becomes a bit of a gridlock situation. And we've seen that in Europe already this summer. And we've got rumblings of more ATC controllers taking strike days. In France, they're just called holidays because that's what they are. They just always take an ATC cancellation strike, call it a holiday. So EasyJet have already cancelled 1,700 flights from July through to the end of September, primarily at London Gatwick and on routes where they have high frequency every day, so that they can reaccommodate people. But we're going to have these challenges as we go on through the summer. So what looked like it was going to be a great season, ATC strikes, ATC resources for the whole industry are going to be something we're going to have to learn to live with.
And I think these sorts of issues they're going to rumble on, aren't they, in terms of what is exposed, I guess, to some extent, is capacity in the system, whether it's ATC capacity in terms of the requirement for investment in technology to facilitate more capacity. It is something that we're going to have to face as an industry right across. And I think we're not necessarily seeing these issues yet in Asia Pacific because we haven't quite got through the peak of recovery from COVID and then growth thereafter. But
investment and experience, those are the two things I think, and the investment one is really interesting because, we're going to talk about how much it's going to cost to become sustainable and all of the things we need to do there as an industry. But actually, we've even got some more fundamental things perhaps that we need to put in place in terms of investment. I mean, I don't think it's a secret that the US FAA have underinvested in equipment and in the infrastructure to help the airlines. And you know, it's a political potato that gets kicked around from one administration to another. We have this thing called the European Union that we were part of, you know, and that's supposed to be a single market, but there's always squabbles over airspace and who controls what, and countries don't want to give up access to their airspace and let someone else control it for various reasons. So it's, yeah, we're a long way from being in a perfect world, that's for sure.
On that positive note, let's move on and talk about why we're all here today. So I thought it might be interesting to just have a bit of a broad overview of where are we now in the conversation about net zero to 2050. So we know that aviation accounts for more than 2% of global emissions. We know that sustainability has become one of the most, if not the most important issue in the industry. And I'm sure we'll hear from Lauren shortly about what that means. You know, I think every single airline is now focusing on sustainability in terms of this being a high importance board level issue. We know that there's lots of activity underway in looking at alternatives, whether that's SAF, whether that's spin-offs of SAF, whether that's different aircraft types, whether that is enhancements on existing aircraft in terms of, I think Airbus are working on new generation wings to improve fuel efficiency. We know that there are developments in terms of electric aircraft. So lots and lots of activity that seems to have, you know, really maybe it was all happening during COVID and there wasn't, you know, the media was focused on something else, but there seems to have been a real expansion of activity in terms of exploring all of these arenas. I think all of that takes us to the point of the industry has given a commitment and, you know, has to be in a place where it's making commitments to net zero by 2050. I think there's consensus that there'll be the journey there will need to be a combination of efforts of different things to do that. I think the big question is, will all of this be enough? Now, that's the $64,000 question, isn't it, actually? I don't know that any of us sitting here today can answer that, but let's delve into that. We wanted to show this. This is something that the Mission Possible Partnership put together, which was just about trying to visually, I think, illustrate what the contribution each of these developments, be it sustainable fuel in terms of biofuels, be it hydrogen powered engines, be it you know, fuel efficiency improvements, what do each of these contribute to getting to that goal? The reality, I guess, is, you know, we can sort of put all the charts together that we like and look at all of these things. What's actually happening to get us to that place? Lauren, super interested in your take on all of this.
Yeah, and really pleased to be here and have this discussion because there's so much changing right now in real time that staying on top of commitments, but more importantly, to your point, Deirdre, progress is really critical. And just by way of context, you know, this has been commitment by airlines to sustainability really isn't new, but there's been a tremendous amount of focus, I would say maybe in the last 24 to 36 months in particular. We've almost had this perfect storm of stakeholders that have really been accelerating the discussion, as well as putting a limelight on what are we doing and how quickly can we go. You know, within United, we've long been supporting some of these solutions like sustainable aviation fuels. In fact, we've been using SAF on a daily basis in our Los Angeles operations since 2015. So this is not a new solution to us. The challenge that we have on the table, which we will talk more about, is the amount of supply. So how can we get more, and in what time frame can we get it? I'll acknowledge before we start that the dialogue really started both with those companies that really had climate ambition early on, and United was one of them. We've got several climate commitments publicly. They've been validated by science-based targets, so having that third-party validation is really important right now. But I'll share that a lot of the discussion started really largely in two areas. One with our investor community, so investors standing up and saying, what is the risk? Talk to me about liability. What is the cost? How are you going to finance this? What is your transition plan? And are you looking holistically at your business? Traditionally, you run an airline like you do any major corporation, and the bottom line comes down to finances. Well, there's an emerging currency discussion around carbon that isn't quite yet embedded into how most companies operate their business, but it's starting to happen. And you can see that take place here in the United States with the impending SEC rule on climate disclosures, in the EU with the CSRD around the climate directive. There is a true desire for transparency, consistent transparency, and that's driving a lot of these charts that you see, like here from Mission Possible. Secondly is our corporate customers. So whether it's cargo for shipping packages, or people for business travel or other, many of these companies have their own commitments, and they really want to make sure that they are stepping forward and supporting the solutions that are appropriate for the industry. No surprise, no matter what market you're in, there's a lot of scrutiny right now and greenwashing claims around some of the climate initiatives that folks have really been touting for a long time. At United, our commitment to net zero never included the use of voluntary carbon offsets. And the reason for that is because we recognized early on that we actually needed to focus on growing a marketplace for these alternative fuels and these alternative technologies. And anything other than that just felt a little disingenuous to us. So those claims are really important to understanding reputation, integrity, transparency. And so our corporate customers stood up early on and said, how do we make sure that we're backing the right solution? How do we make sure that we're partnering with the right airline to really establish a solution that's permanent and reduces emissions in a capacity that that we can actually be proud of? And so between the investors as well as the corporate customers, they were really early champions in really trying to identify what does our path forward look like and how can we work together to get there. So I'll just pause there. It's a lot of information, but there is a tremendous amount of opportunity staring at the commercial airline space right now.
Really helpful, and I think you managed to respond to one of our questions that we hadn't managed to put to you about, are there carbon offsets that aren't an exercise in calculating CO2 away, or that aren't effectively greenwashing. So interesting to to go right to that point. This must resonate with you, Kit, in terms of the corporations understanding what decisions to make about travel planning, and meeting their own sustainability targets from an ESG perspective. I guess that's a space that you're operating in, isn't it?
Yeah, exactly. We do a lot of travel policy analysis and travel program analysis to help a corporate work out if they're committed to net zero by 2040, 2050, what does the travel program need to look like over the next 15, 20, 25 years. And so the screenshot you've got is really interesting because it's the ideal case, right? The ideal case is travel gets to net zero and ideally without too much corporate intervention, right? They ultimately just want to buy a ticket and know that that will help them with their goals. The reality, of course, is different from that. Often it's airlines with sustainable aviation fuel programs where the corporate can make a commitment and help fund that, which is a terrific way of creating a buyer incentive and funding that. But the other part and part that we think a lot about, and I think corporates think a lot about, is it's not just theoretical of an ideal case. They have to be realistic, and the realism around this is there's a lack of supply with SAF, and unless you're buying in small quantities, it's really sold out for the next couple of years. And in terms of that SAF that's coming through, will there be enough of it? Indicators at the moment, Boeing's got an excellent dashboard, which I believe you're going to show later. On the dashboard, they show the amount of each scenario for SAF and the amount of planned capacity. And we don't have enough planned capacity to even reach our 2030 SAF goals, let alone the 3,000 sustainable aviation fuel plants that will be needed by 2050. That really some of that funding and planning needs to start happening today. So it's possible, it's doable. I don't want to, I'm going to sound like a naysayer, I think, during this webinar, but like, I don't want to sound that way. It is doable, but it still requires more action, particularly on a governmental policy basis, because the sums of money that will be involved to get aviation and travel in general to net zero, I suppose all industries, it is just humongous, and it's a scale bigger than any number that governments are currently talking about, which I think is quite scary, but is the reality that we live in.
I think therein lies the challenge as well, doesn't it? In terms of we are emerging from a pandemic, across every nation, with battered finances, with governments trying to put recovery plans in place in terms of the economy. And you've only got to look at all of the levers there that are, hurting all of us in our pockets, probably on this panel, and way beyond across a raft of different countries. So I think, it's really difficult to envisage that the scale of firstly, it's difficult to envisage the scale of investment that's required and the pace at which that's required in terms of going forward and starting, as you say, as we should be off the starting blocks now. But that's on you go, John.
Yeah, I was going to say, if you look at the industry now, Deirdre, I mean, the airline industry per se, over an economic cycle, doesn't make a great profitability margin at all, and if you look at it by individual airline, there are probably 10 or 15 airlines that are extremely profitable. And whilst we've had capacity discipline in the last 12 months, that's beginning to break a little bit. We're seeing more aircraft being delivered, and that's going to impact yields. And then we're going to see, a bit more competition in the market, and airfares might slightly reduce and profitability might begin to fall again. And yet we're asking the airline industry, along with its own existing challenges, to start thinking about the bigger picture of sustainability. What can it do? But does it actually have the funds available that it can invest on that journey now? It doesn't have the capital. It's got to go out looking for it. It's got to find support from others. It's a very, very tense equation we have at this moment between where the industry is, its profitability, and what it can do in the future. And some of the things that United are doing, which we'll discuss, are all very valuable, but United can't do it all on their own. None of the big 20 airlines can do it on their own. It needs a much bigger play around the globe.
I guess the question, though, is can the industry afford not to? And therein lies the challenge.
Right. No, and I think these are all extremely valid comments. To Kit's point, the challenge on the table, in very basic terms, isn't so much what's the solution we're going to need to function at a low carbon economy. It's how quickly can we get there? What's the pace of change? And so really the problem statement that the industry needs to solve is how quickly can we transition? And to John's point, we really don't have the margins to sustain this ourselves, which is why policy incentives are super crucial. And I know we'll talk about that in a couple of moments. But in addition, the industry stepping forward where we can to signal that we are ready and supportive of a transition. As a chief sustainability officer, I get the question all the time around why is this so important to United? And my response is a pretty simple one. Any company, small or large, public or private, must currently be looking at a future which needs to be in which they need to be successful and thrive in a low carbon economy. So if you're not doing that, if you're not recognizing that in a macroeconomic setting, the entire corporate function, no matter where you're located, needs to thrive in a marketplace that actually has a dollar and perhaps a penalty associated with carbon emissions, you're not going to be successful in the future. And so for United, this is really about competitive advantage. It's about long-term planning. It's about strategic insights and being prepared for the future. And I think this should be a statement that anyone is saying in any position across companies worldwide. We are in a position right now with sustainable aviation fuels where we don't want to arbitrarily drive up the cost of a scarce resource for sustainable aviation fuels. And that's a big, big challenge to Kit's point and John's, which is why United stood up the investment fund that we launched earlier this year. It's called the Sustainable Flight Fund. We got 5 other investing partners across the value chain. So Boeing, GE, we have an airline with Air Canada, JP Morgan Chase, and there's one more in there. And together we pulled resources for $100 million to invest in SAF production. And the whole intention behind that is we didn't want to take $100 million and pump it into the SAF market to just pay the premium of a finite resource. We actually wanted to put monies towards those technologies that we think over time have the chance to become whether parity to Jet A or parity to renewable diesel, or all of those different business cases that we're effectively working on in any given moment to build a marketplace for SAF. What Deirdre pulled up here, and I'll just briefly walk you through it, is United's roadmap to 2050. What's interesting with this compared to the Mission Possible one that was just previously shared is our expectations around alternative propulsion. So that means electric and hydrogen. That is represented here in the yellow band, and it's actually quite small and modest. So if I could take a moment here and suggest to everybody who's listening this afternoon or this morning, you should be out looking at every airline's roadmap. This is really our signal to the market, to investors, to policymakers, where we intend to spend our time, money, and resources over the next couple of years to really transition to be successful in a low carbon economy. What we've identified here is really, we're going to realize about half of our reduction of emissions by simply using less fuel. So those are the blue bands, the purple and the yellow. The dark blue is really around future technology. So think net new engine developments, think aircraft design, like Boeing's brace truss wing, transonic wing concept, and Airbus has new blend wing designs. The royal blue is really around that fleet modernization that you were just talking about. So by way of context, a MAX 10 replacing a previous narrow body is about 20% more fuel efficient. 787 replacing a 767, about 25% more fuel efficient. Very significant in the context of carbon emissions reduction. Ops efficiency is kind of business as usual, so single engine taxiing, looking at GPU versus APU, some of those basic things. And then alternative propulsion in the yellow. This is really, we're being very conservative in our expectation around these technologies right now because there are regional differences around desire to invest in the infrastructure required to enable these technologies to be successful. So until that's clearer, we're going to continue to be a bit conservative in that space. But that being said, we do expect that band to increase over time. We've made significant investments in several of these companies that have these technologies, and we're hopeful that this increases. But what I do want to take just one moment on is all the green bands. And this is different than likely what you'll see in any other airline. I don't think I've seen this with others. United actually used its understanding of the SAF market to define for our audience and our stakeholders how far do we think today's technology around SAF is going to get us. That's the light green. That's primarily those used cooking oils and greases and other feedstocks. How far do we think that's going to contribute to our 2050 goal? The second generation SAF is really those SAFs that are today in demonstration scale. So think the 10 to 20 million gallon plant. There's a handful of those. So this is alcohol to jet, this is woody biomass, this is municipal solid waste and Fischer-Tropsch. There's a variety of these biofuels-based technologies that we think will probably come online sometime in the mid-2030s in commercial capacity. And then the future, the third generation, is really around captured carbon. So how do we pull CO2 out of the atmosphere and convert that into a power to liquid e-fuel? There's a variety of titles associated with that category. I do expect, again, that this part of our reduction curve will likely increase over time as the economics and the technology matures. These are largely in R&D right now. So my message to everybody here is go take a gander and take a look at those CRR reports, those ESG reports, those sustainability reports. They all have this. This is part of the transparency movement being requested by SEC, CSRD, and others to understand how are we going to get there. So most airlines have this published at this point.
I think that's really, really insightful, Lauren. Thank you. You know, and I think the challenge actually for the industry is capturing all of the progress that is being made by individual airlines and individual organisations across the, you know, across the whole ecosystem, and scaling that up. You know, in terms of actually, are we collectively as an industry? We might all be confident in our own journeys that we're going on, but how does that, you know, how do we tally all of that up? And we'll look at some of that later. Kit, any reflections from you on that before we move on?
Not really. I mean, it looks like a great roadmap, and I think, you know, United are best placed to change to decarbonize, right? Like, they have influence over suppliers, they have buying power. It's terrific to see. You know, when we look on a global basis, how do we get every airline to be doing this, right? Because that's what's needed. We can risk having some airlines that are really far ahead, and that's important and good, and that will create a buying incentive, particularly as more and more customers, exactly to Lauren's point, sustainability is good business, right? So more and more customers will go to United over it. But on a global basis, we need every airline and every country's airlines to care about this. And certainly there's some parts of the world that care more about sustainability right now than others. So I think that's a really interesting area to explore as well. But no, I think it's really interesting.
I think that leads nicely into my next slide, which is, you know, this sense that the industry isn't static. IATA, I think, forecast that demand for passenger demand for air travel by 2050 would reach 10 billion. We took a straight line extrapolation of the growth rates for the past 20 years, projected them forward, and we got to 11.7 billion, but we won't quibble over you know, over the number, given that it's so far away. We know also that the world population is growing. It's projected to reach nearly 10 billion by 2050, and that much of that growth is going to come from the global south, which of course currently has a lower propensity to fly. And picking up on that point about the variation in terms of progress, there's a huge variation in terms of how frequently populations in the global south versus the global north fly. I think there's a tension there for many governments in developing countries around recognizing the absolute benefits that come from air travel and aviation, and probably everybody who's engaged in listening in today recognises that. You know, that's why we're all fundamentally we're all here in the industry. We know that as the wealth of a country improves, air travel facilitates that, but then also becomes more accessible to the population. And so we're going to see that balance of growth shift, particularly also as we see declining populations in some of the nations which are currently the biggest contributors to demand. So I think there's something for me around, and I'll skip on to the next slide, I guess, because it just illustrates, if we look at Boeing's SAF dashboard, just as a one lens, I guess, to look at that. All of the production at the minute, if we're just talking about SAF, really is centred around those global north countries. How do we, as an industry, ensure that the benefits that aviation can bring are available to countries that do not yet have as developed an industry as some other countries? But how do we also ensure that that's done in a sustainable way without dampening the growth that potentially can come from aviation? Like, I'm not articulating that brilliantly, but you know, I think
here's a good example. You and I were at a conference in April, and on a panel there was Chief Commercial Officer from Air France/KLM and the CEO of Royal Air Maroc, and they were talking about sustainability. And to that point about sustainability and fairness, it transpires that KLM and Air France appear to have purchased the whole of the available SAF production in Paris CDG, or certainly the very largest part of it. And yet any airline that operates to CDG has to put in a certain percentage of SAF into their fuel blend. Otherwise, they get penalised by the authorities and the French government. Well, there is no supply to be had because it's all been purchased by one airline. And we have this disparity between the base carrier and the production supply in France. And, you know, all of the African carriers who are flying into Europe are struggling to find SAF anywhere. And if you look at the map, you know, it's white. There is no SAF production taking place in Africa. And to Lauren's point about United Airlines, I mean, I think you've got the majority of SAF production in the US at the moment, haven't you, Lauren?
We do, and I don't say that with pride, because I think this is a really important discussion that we're having about supporting a global development and shift towards alternative fuels. You know, I'll mention there's a commitment, a global commitment through IATA. We have a long-term aspirational goal that the industry at large, so every corner of the globe, commits to net zero by 2050. This was an agreement that we reached, I think it was last year, that we will all achieve net zero by 2050. And so now there's a lot of discussion about how can we get there. Fundamental to the comments John is making is really policy. So what's happening in France is that there is a mandate to physically use the alternative fuel at those locations. I question that, and I do have concerns about that, but because of exactly what John is referencing. You know, there's a movement right now for the airlines and the industry across the value chain to develop a book and claim system. So what this means is that you disassociate the physical fuel from the carbon emissions reduction, the greenhouse gas emissions reduction associated with the fuel. So think about clean energy. Right now, you can go out and purchase green power from your utility provider. You're not actually getting the physical electron that was created by the wind turbine or whatever other technology used to source that electron, but you are getting the credit on your utility bill. And we are trying to establish a very similar book and claim structure to aviation for exactly these reasons, such that airlines, if they don't have physical production in their backyard or where they operate, they can still purchase the attributes, those reductions from use of SAF, without having the physical SAF in their fuel tanks. This is really important because right now we cannot afford, as an industry and or as government leaders anywhere to invest the kind of monies required to ensure that there's SAFs everywhere, we need to make sure that we're developing SAF where it's economic. And we, at the same time, have an obligation to make sure that every airline can realize their climate commitments by accessing the reductions enabled through that SAF. And so that is being worked through right now. There's a lot of recognition that this is a critical enabler for a global marketplace around SAF. We are working with ICAO, which really is our global industry group that sets the policy and the commitment by the industry to achieve these goals of net zero. And we will get there. It's a matter of working through the details to make sure that we do this right. But there's absolutely a commitment to make sure that this is not some regions succeeding over others, because that will defeat the purpose of us addressing climate change, which is a global issue.
And I guess sort of fundamental in that is that there sort of has to be parity of pricing, doesn't there? You know, in terms of if the book and claim is being done from a part of the world where there isn't production, then the pricing has to be on the same basis as if you're located in the place where it is. A fascinating subject. I think that we could probably have a whole spin-off conversation around. I think it's, you know, it's really interesting to hear that perspective, because I think that when you look at the scale of what will be required, and there's another Mission Possible partnership visual here that just talks about, you know, by 2050, here's what we might need in terms of the volume of SAF plants, the volume of SAF production, you know, how we turn some of those targets into metrics. It does follow that it will not be economic to invest in these in every single part of the world. It just won't. However, it's also not economic to have to be transporting fuel from one place to the other. So it's interesting to hear that there's a creative approach being taken or being mooted, you know, to get around some of those headaches. We've got a question from somebody asking, can book and claim be used at a station where SAF is available, or is it limited to places with no SAF? I don't know whether that's a detailed question, that's a detail too far, but yeah, interesting question.
No, absolutely, it can be used anywhere. That's the whole point of the system. Today, United uses sustainable fuels in Los Angeles, San Francisco, and Amsterdam. We're expanding to Heathrow later this year. All of those flights that use SAF, we claim the reduction of the SAF. But to John's point, we do have obligations from mandates to actually have some uplift of SAF. And so that is forcing a physical relocation of the SAF. So shipping in or just distributing SAF in locations that may not necessarily produce it. I think there'll be a lot of learnings from that, and I'm very curious to see how successful those programs are. Here in the U.S., we very much have, the carrot approach to policy, allowing the different production pathways to sort of yield out which ones are going to be successful, and then where should they be geographically based for production. And that's done both through federal policy as well as through state level policy. And so what we've seen here, I see this note about parity to jet. The only way we're going to reach that, at least here in my backyard of Washington, D.C., is through the federal incentives that we have in the Inflation Reduction Act, coupled with some of these state level incentives. For example, the state of Illinois has a $1.50 per gallon sustainable aviation fuel tax credit that has to physically be used in the state of Illinois. So there are still learnings around how do we actually grow a marketplace quickly, because fundamentally, that's what we're focused on as an industry, because that's what we need to achieve so that we can have a robust marketplace for SAF.
And I think that carrot stick approach is, time will tell, I guess, what the right approach is. I think the reality, and if we get to the slide, then we'll talk about it a bit more. But I think the reality probably is that there'll be a combination of these things required, which are about the circumstances in the region or the countries where you know, where the issues are being debated, and that's I think where we are at the moment is we've got different nations adopting different approaches, and perhaps over the coming 5 years, 3 to 5 years, what we'll see is a kind of coalescing of more commonality in approach as some of these things start to bear out. It was interesting to see IATA published their roadmaps relatively recently, which I think is I think it's what we need in terms of where's the visibility, and we talked about this earlier, didn't we, in terms of everybody. This is a priority for every airline in the industry. You know, it's a priority for all of the operators in the wider ecosystem. But actually being able to measure what is happening collectively as an industry is essential. You know, if we want to be sitting here in 2030 saying where are we on the journey to 2050, you know, have we missed the boat? Are we 25% of the way there? What does the curve look like, and where are we on the curve? You know, so I think it's encouraging that we're here. I think IATA have said that their first publication of results is going to be in Q1 2024. Correct me if I'm wrong on that, but you know, I think that's almost it's not the starting point, but it's the measurement of as an industry, how are we making progress on this.
Yeah, and you know, these roadmaps are developed to sort of inform the conversation about all of the dependencies that exist for success. So United alone, or any airline alone, is not going to be able to accomplish the goals that we need to realize as an industry. We need policy support, we need infrastructure investment, et cetera, et cetera. So these are really intended to show the comprehensive approach that's going to be required over the next couple of years, decades, to enable this transition.
It's a lobbying platform as well, isn't it? You know, in terms of starting to engage both government and the investment community around what does this look like and what does it need to look like. I think that's the reality, isn't it?
It is, and you know, also the practical reminder that I will offer is that airlines don't produce fuel. So there's this whole other element of this is a production challenge. We are the demand side of the equation. There's no lack of demand out there for SAF. John pointed out how KLM has scooped up the majority in France. There's no shortage of demand. It's really a production problem. So we are regularly revisiting the dialogue around how do we as airlines influence production side challenges. And that's where you know, these tools are really important to remind folks that we are a facilitator of this transition, but we're not actually the solution provider itself. And making sure that we're working with the solution providers, the fuel producers, whether they are startups and some of these novel technologies, or they're incumbents and they have access to the infrastructure we're going to need ultimately to deliver the fuels. We need to work with all of them so that we are transitioning in a way that actually gets us to our goals.
Okay. Now we have a question which has come in that you may or may not have the answer to, Lauren. What's the reason for IATA not accounting for fleet replacement in the 2050 contribution? The question is saying, as the contribution from technology only equates to 13%, that may or may not be something that, and maybe that's everyone has a different position in terms of the contribution that fleet replacement makes. So I think if we look at this this proportion here, there's a question about to what extent does that actually reflect fleet replacement as part of the mix. I think you had it in the United roadmap as a higher contribution, didn't you?
Yeah, well, What I do know on an aircraft level is that it's a roughly 20 to 25% fuel efficiency when you retire old aircraft. United is much more bullish on this because we've made a push as part of United Next, which is our growth strategy, to invest in modernization. So we've got about 700 aircraft, narrow and wide body, on order within the next decade. It's a lot. Most other airlines are not in that position. So on an average, I'm not surprised that this is a little bit lower.
Yeah. And I think that for all the very large aircraft orders out there, I'm looking at Indigo, I'm looking at Ryanair, you know, there are a raft of other airlines who have a different fleet composition and, you know, aging fleets. I guess it's wrapped up in that, really. I'm conscious of time, and I wanted to get to that carrot and stick slide, so hopefully we will get there. And I know that Kit's got a hard stop at 4, so Kit, if we lose you, it's been great. Thanks for your contribution. In terms of the money, so you know, we talked earlier about very good airfares at the minute in the industry. We've heard again, I note from the Mission Possible Partnership, their estimation is $175 billion will be needed every year between now and 2050 to get the industry to net zero. I guess there's just a big question about what impact will all of that and the investment in SAF and all of the new technology, what impact is this going to have on demand and airfares when travel is already very expensive? And it's, you know, again, there's no easy answer to this, is there?
No, I worry that we might actually break that elasticity that's been so strong, and we could end up in a position where we actually create, you know, more aircraft than we actually need, and long-term growth begins to fall quite dramatically. We're already seeing population declines in some parts of the world, and when you look at how much airfares could be, it's going to discourage even the most affluent communities, and the growth we're expecting is from emergent economies where, you know, they're just about getting enough disposable income for low-cost carriers to penetrate and stimulate demand. If we have to pay for it as an industry and we have to put more and more supplements on our, you know, on the cost of travel, then we're not actually going to solve the problem. We're creating another problem rather than solving the issue.
We have an interesting question actually, where someone's asked, and it's a question for Lauren, how do you see allocating a SAF premium net of incentives to your passengers? Is it a blanket over every passenger? Is it an optional premium for a fully decarbonised trip? Yeah, interesting question.
Yeah. Well, that's a great question. So I think I mentioned that our corporate customers have been real champions since the beginning. What I didn't talk about was our leisure travelers. And earlier this year in February or March, when we launched our Sustainable Flight Fund, which is our fund that invests in sustainable aviation fuel producers, we also launched 2 things for our leisure travelers. One is estimated emissions in the booking path, so educating travelers on which flights are most efficient. And then 2, as they move through the booking path, when they get to the ancillaries page where they say, I want to buy a snack or extra room, leg room, or this seat or that Wi-Fi, you can also contribute to United's investment in the Sustainable Flight Fund. I'll be totally honest, I was skeptical. I wasn't sure that the average traveler was going to want to put some dollars on the table. And I think the last number I saw was north of 50,000 contributions since February or March of this year by individual travelers. And so there is a willingness to pay to do the right thing. They are not necessarily offsetting their flight, they are investing in the future production of SAF. So I think there's a tolerance there. It's a question of how much is it. You know, what I'll suggest around who pays for it is that we know that it's going to take 150 facilities by 2030. Each of those facilities is $600 million to $1 billion. That's a lot of money. But we also know that today in the US alone, there's 17 billion gallons of ethanol produced for road transport. As road transportation electrifies, that production is going to free up. And in addition, there's 3 billion gallons of renewable and biodiesel out there. again, as ground transportation electrifies, that fuel is going to free up. So there is existing infrastructure and production that can be accessed over time, but there are dependencies around when will ground transportation electrify? When will we have enough renewable power that is abundant and cost effective to enable some of these SAF pathways to be more economic? When will green hydrogen come online? And so there's a host of different dependencies that are above and beyond aviation that we need to mature before the industry can successfully transition with confidence. But all of those changes are coming. It's just a question of how quickly.
And I think that's an interesting proposition, isn't it? That actually often what we hear is that there's a competing demand on resources in terms of lots of different industries trying to decarbonize, and that having we talked about that in this morning's webinar in terms of the strain that places on the consumption of energy and energy production. So actually, it's an interesting perspective to think about that as other industries decarbonize, then that may free up production for emergent technologies or emergent production facilities. Yeah, interesting approach. I said I would get to this slide. It's now 1 minute past 4. We're nearly there. For anyone who has to drop off, and I think Kit's gone. We will send you a recording of the webinar, and we won't go much beyond the next couple of minutes. I think we've talked a bit, haven't we, throughout about carrot and stick. We've heard your perspective about what's happening in the US. I think what's interesting is there are a raft of different approaches being adopted. We've got blending mandates on SAF in Europe. There are a number of regulatory frameworks emerging. I was reading a story about Japan, who are going to mandate the use of SAF as well, I think not until 2030. And I think we're going to see a raft of those different approaches, aren't we, coming in the next 3 to 5 years. We mentioned earlier the French ban on domestic flights that could otherwise be operated by rail. In itself, perhaps not a significant contributor to volume, but there's a principle here, isn't there? And I think the likelihood of these kinds of policy decisions being made or being continued to be made is fairly high.
But those were perfect routes for trialing VTOLs, electric aircraft, all of those sort of things over time. What we're doing is we're making lots of individual decisions without thinking about the impact elsewhere, and not just on other transport modes, but on other countries, on other decisions that are being taken elsewhere. And it's that collective, thinking that we sometimes lack as an industry, and it's frustrating to say the least.
Absolutely. And I think, as we said earlier, Lauren, time will tell, won't it? If only to have a crystal ball to look back and by 2030 maybe and say which was the right approach. I don't think there is a right approach. I think it is about.
No, there probably isn't. I mean, on an optimistic footnote to all of this, Lauren, you've got a job for life, haven't you?
Well, I think recognizing climate impact and carbon emissions is going to become core to business operations moving forward, whether it's in a defined sustainability role or it's embedded in all job functions remains to be seen. I think it'll probably be both. To your question though, Deirdre, I can't speak on whether sticks will be more impactful than carrots, but what I can observe is that here in the US with the Inflation Reduction Act credits, in the last 18 to 24 months, the amount of climate innovation and technology innovation that has come forward that these pathways used to just not make financial sense, and you couldn't actually create a business case around them. Suddenly, we've done an about face because we are in a position where you can stack a bunch of tax credits and policy incentives in a way that allows some of these technologies to actually be viable and have a potential to come to market. So I've seen the power of market-based solutions and incentives to enable innovation to come forward at a pace that I've not seen before. And I think that's really exciting. And so if we can marry that with the right kind of long-term signals to investors and financiers that governments are behind this transition for aviation, I'm very optimistic that the industry will get to a place where we're flying low carbon sometime in the next decade or two.
And I think that's a fantastic place to leave it. Unfortunately, we're well out of time, well past time. Thank you for those of you who have continued to listen beyond 4 p.m. Lauren, thank you so much for joining us this afternoon, this morning for you. It's been great to hear about the work that's underway, and I think we'll watch with interest on some of the subjects that we've discussed this afternoon. Thank you, John, as well for your contributions. And just in terms of next up on the webinar, we'll be taking a break in August, but we'll be back in September. And for those of you who are regular listeners, you can check out OEG's website for details of our next topics. We'll take the summer to think about that, John, won't we? And come back to you with an exciting programme, I'm sure, for the last quarter of the year. Thanks to everybody for listening. Thanks again, Lauren, and we'll be back in September.
Thanks.
Thanks. Bye.
Bye.